Kamal, the success or not of Brexit, the easiest way to measure it is probably pound strength or not. Does it touch 150? Does it go higher than that?
Absolutely. Well, we've always thought that the catalyst for a meaningful and sustained break above 140 was at least acceptance that there will be a transition agreement. Our baseline scenario is that we will get a transition agreement, and we think the pound should benefit in two scenarios, whether it's a limited time period, which in all likelihood will probably have to be extended if a deal isn't agreed, or if it's a fixed time period, concessions will have to be made by the UK government to abide by that particular timeline. It's interesting you're showing that chart on the screen there. To me, that's very consistent with our fair value estimates. We've just put our new note that looks at sterling fair value. 160 is exactly where we are. And when we talk to clients and institutional investors, their common retort to cable around the 140 levels is still it's fundamentally undervalued relative to this stage of the business cycle.
Kamal, where's the alpha to be made? We've heard a lot of different interesting pairs, odd pairs in this environment. Where's the alpha to be paid? Where's nobody looking right now?
I think you're quite right. There's lots of consensus trades out there, short Swiss, the higher euro. We're looking at some of the peripheral currencies. We put a note out early this week, Tom, that looks at the fading of the ECB's QE wedge, which we think should be beneficial for the peripheral currencies, right. Scandinavian currencies in particular. So we do like the idea that once the ECB fully commits to exiting out of QE, that those distortions caused by quantitative easing and a weak currency will allow more meaningful strength in both the Swedish krona and the Norwegian krona.